Welcome to Unit 6, an introduction into momentum. This lesson, we're going to discuss momentum. And as you see on the chart, I have a base and the space. So what I want to start with is it is important to understand this concept because being on the wrong side of a directional trade, it often happens because a trader lacks the understanding of market momentum or the momentum that is beginning to occur. And you end up getting short-term counter-trend scalps. That would be an exception. However, if you fail to understand the momentum of the larger time frames, traders often put themselves at risk of losing a lot of money. Okay, so what is momentum? Momentum is the strength or force gained by a motion through the development of events. So it's pretty simple. The force gained or the strength of motion through the development of events. So as you've already learned in the prior lessons, accumulation and distribution are the primary mechanisms of moving the markets up and down. So in grade school, where I had mentioned before, you studied physics and you specifically learned about kinetic and potential energy. Well, there's this idea that the wider the base, the larger the space. That applies to both rallies and corrections, or up moves and down moves, or uptrends and downtrends. It also describes a sideways market where stored energy is being released, which results in a large price movement. Here on this screen right now is crude oil, a large base that occurred for 20 years, followed by an enormous rally from $10 all the way to $150. So consolidation is one of the most discussed topics amongst traders, but what you see typically is with the inexperienced trader, they like to talk about how the market is trying to decide what to do. It's always waiting on news or some other political event. But the way I approach it, and I know consolidation, is simply a pattern, and that pattern begins to top and trade sideways or begins to base and trade sideways. So essentially that consolidation is the accumulation or the distribution pattern. What is this idea of market weighting? And it's important to view market structure on multiple time frames to examine relative trends to those multiple time frames. If you observe a consolidation on one time frame, but you're not really sure what's going on, you can rotate to the next larger time frame until you get some clarity of your trend. So it's important not only to look at just one chart that you're trading on or a single time frame, but to look at all of them. How would it be possible to understand what's going on to do in the future if you don't understand what price is currently doing? Let that sink in for a second. Using multiple time frames will provide insight to the chart's immediate situation, the immediate outlook, and give you the long-term outlook. So you're understanding the bigger picture. So if you would happen to see this large base forming for the last 20 years, from 1980s all the way up into the early 2000s, you could start to figure out, well, maybe there's a large base setting up for a significant breakout or a significant rally. Sure, there was geopolitical events that occurred during this time that would create a reason for oil to go higher, but just from a technical standpoint, this is all that we care about. Use the charts to gain understanding and not just look at a chart to guess where it's going to go. During accumulation and distribution, I want you to ask yourself, where is the current price action in relation to the longer term trend? How is price reacting to more significant levels? And how significant are those nearby levels? And keep in mind that chart patterns form on all time frames, and to recognize those time frame patterns, you must analyze multiple time frames. Pretty simple, but so many traders miss this. If you want to understand momentum, you need to understand what caused it, where it came from, understand the time frame, understand the trend that it's relative to, and we'll get into more of this later. But I just want to introduce the idea of momentum. In this example, you have a large base or a large amount of potential energy that's being stored up for 20 years, and then finally that energy is released and you get a large space. You get more violent type of moves. I just want you to think about momentum relative to the accumulation phase, or momentum relative to the distribution phase, and then relative to multiple time frames. Keep in mind, this is a monthly chart, so it's going to look different on multiple time frames. That's really the thing I want you to take from this and start to use when you're thinking about your approach and thinking about chart reading.